the only thing I can say in a broad sense is that the Forex market is starting to spin off or become disconnected from actual prices. Whereas that would mean that the next financial crisis is going to be strictly that. It's going to be a financial crisis strictly limited to the banks, and it's not going to affect consumer prices outside of it. We're still going to have that price inflationary environment.
Thursday, September 28th, 2023, Maneco 64, home of alternative economics and contrarian views. So today we've got something slightly different. We're going to talk to Rafi. Hi, Rafi, how are you?
Hey, Mario, I'm a little tired, but I'm good. Exciting last night. I'm trying to still work it through.
Yeah, it's very, what's going on in the markets and in the world is very confusing. And like you said, you tweeted that you're praying to God that this is the end game. We'll have to see. But before we do, I don't know if you've noticed, Rafi, that it seems to be something happening not just in the States, but also here in the UK, where the police don't seem to care anymore about people robbing stores or burglaries. And I saw a video of an Apple store in Philadelphia recently of people just going in there and stealing things, and it doesn't seem like law and order, in my opinion, seems to be going down the drain, and that's not surprising. I would say, having read history and when empires fall and currencies collapse, there's a lot of the law and order collapses as well. So that's why I've recently affiliated myself with the Dirty Man Safe. So this is a very simple way of keeping things that you cherish, valuable things, and an easy way to do it. And you can put it anywhere if you have room in your property, as you can see here. I've got one that Howard from Dirty Man Safe sent me. So all you do is you open the top and you put your valuables in there, and then there's another pipe that you have to dig onto the ground, and then you put it in. But if anyone's interested, and right now he's only selling this in the US, you can use my promo code Maneco10 and you get 10% off. He told me he's looking to be able to ship to the UK as well. Hopefully that will be coming up soon. So all the details are below in the description. What do you think about the Dirty Man Safe, Rafi?
I would love one of those. Does it have a metal detector blocker?
Well, he sends with it is little pellets, uh, like like little pellets, metal pellets that you can put all over your garden, wherever you're gonna make the hole. So if someone comes to try to detect, they'll get all these signals everywhere.
Oh,
So,
cool.
yeah,
Like a metal detector decoy.
yeah, that's right.
That's awesome.
Yeah,
Okay.
and the other thing I wanted to talk about, people always ask me, is about this Krugerrand. Uh, well, it's a replica Krugerrand that's on my shelf. So all it is, it's a replica Krugerrand. It's like a paperweight, as you can see. And where did I get it? Well, from Oliver at Gold Investments. I don't know if he still has some, but it says here that it's a replica of Krugerrand, manufactured and distributed worldwide exclusively by Sandhill Bullion, and they're from Leeds, England. But I don't think that company is around anymore, because they have their phone number and their telex on the back. So that's probably from the 1970s or early 80s. Krugerrands were the most popular bullion coins. What And talking about popular bullion coins, Rafi, just wanted to show you that it's not just in China where people are rushing to buy gold, as we've seen recently, but also in the US. Don't know if you've seen this story. I'm going to share it with you. It came out yesterday. Costco is selling out of small gold bars within a few hours, CFO says. So when we load them on the site, they're typically gone within a few hours, and we limit 2 per member, CFO says. So I didn't know that Costco sold gold bars, but apparently they sell caviar, caskets, and 6-pound tubs of Nutella. So
have you ever been to Costco, Mario?
I think they have them here in the UK, but no, I've never been to one.
I on my trip to the U.S. This summer, I mean I've been to Costco before, but it's amazing what they have there. It's like the last bastion of capitalism. It's really amazing.
So yeah, that's interesting. So it says Costco did not immediately respond to a request for more information about types of gold bars. It tells how much they cost or the factors behind on demand. On Wednesday, so this was yesterday, the site showed a price of $1979.99 per ounce. So yeah, they've got a premium on the COMEX price. It's the same thing that's happening, I guess, in China. They've got a premium on the COMEX price. And that's the thing, a lot of commentators are trying to say, oh, China is limiting, imports of gold and so on. And they don't actually. There is maybe a tax, but why aren't people saying, oh, the U.S. is limiting imports of gold, right? Because Costco is charging, almost 2,000. So I thought that was interesting. And the other thing as well is that the same thing I think is happening in China. And this is from a guy I follow on Twitter. Demand for gold surges in China with Shanghai gold premium hitting record. And it talks about here that retail gold price breaks through the 600 yuan mark. And the other thing I saw is that in China, they like buying what's called little beans, like really tiny beans of gold. They're 1 gram. Those are for the younger people. So it looks like it's a worldwide phenomenon. And with that, Rafi, I wanted to move on to the dollar index, because maybe you can talk a little bit about it, because you tweeted yesterday that, and a lot of people have been confused because the dollar index is going up, oil is going up, and bond yields are going up, stock market is going down. It seems like something's happening. What's your take on it?
Yeah, I just started looking. Sorry, I just started looking into this last night, and it occurred to me, oil was up like 3.5% yesterday, and the dollar index has been climbing pretty strongly for the past few weeks. Week after week. I don't know the exact numbers. I'll look at the chart. I'm going to be talking about this on today's Silver Report, or it's going to be published tomorrow on Chris Marcus's channel on the Silver Report. How it looks like the dollar index and oil are now trading together, where they should be trading inversely, which is what they've always done, which makes sense. People think, and this is not the correct way to think about it, but it's sort of based on truth, or some true aspects of it, that the dollar is oil backed. It's not. But what gives the dollar a lot of its purchasing power is that OPEC oil can only be purchased in dollars. So the dollar is like sort of oil backed. So if the dollar goes up, oil goes down. That's how it's always been. It was certainly that way in 2008. But that changed actually in 2021, 2022. And it started to change. And now they're really trading together, the US dollar index and oil. And what does that mean? I can't say exactly what it means. I'd have to go into when you try to figure out what this is, it's like you have to go into the reasoning why someone would buy dollars and buy oil. You can figure out the logic of why it would be inverse, but why it would be together. The only thing I can say in a broad sense is that the Forex market is starting to spin off or become disconnected from actual prices. Whereas that would mean that the next financial crisis is going to be strictly that. It's going to be a financial crisis strictly limited to the banks, and it's not going to affect consumer prices outside of it. We're still going to have that inflationary price inflation while the financial crisis is going on, which is going to force the Fed to appease the banks and print trillions of dollars to keep that going. But it's going to become more and more disconnected from actual prices. that's what we're going to see as the end game gets closer, and we're starting to see it now as the dollar and oil are trading together.
Yeah, that's a good point. Yeah, the FX market is, I think they trade like $7.5 trillion a day. It's a casino, really. The other thing I would say about the dollar index, first of all, it was started out in March of 1973, and it started at 100. And I've looked into this. Back in March 73, the price of gold was 85. $85, not 1985 or 1885, 85.
Wow.
And the dollar index now is what, 106, and people are going, oh, the dollar is, it's exploding. But in 50 years, we've gone up 6%. Whoopee,
Yeah.
And the thing as well is that look at the basket that you have, what the dollar index represents. You got 57.6% euro. And it's interesting that prior to the euro, the Deutschmark, I think, was the biggest weighting. And you can still check the Deutschmark versus the dollar on some websites. And
what does that even mean?
Well, the Deutschmark is part of the euro basket, and the rate at which the Deutschmark was converted into the euro is fixed. I think it was €1. One Deutschmark was €1.98 or something. So basically, you can keep track of the Deutschmark. And I looked at fxtop.com at the dollar versus the Deutschmark since 1973 till today, and the dollar's down 46%. So what I'm trying to say here is that the creation of the euro kind of masks the strength. It kind of masks the weakness of the dollar versus like the Deutschmark, because it brings in like crappy currencies like the Italian lira, the French franc as one. But then you have the yen, which we know the Japanese are really trashing that currency by keeping rates, reluctantly low or even negative. We know what's happening here in the UK.
It's not like they can change. It's not like they can save the yen. It's doomed at this point.
Yeah.
There's nothing they can do.
Yeah, and the pound as well is the third biggest weighting, and we have the Bank of England rate at just over 5%, and RPI, which is, I think, the best measure of cost of living, at 9.1. So why would you want to have that? And we got the Canadian Reichsmark here too, or the dollar. I call it Reichsmark because of what's happening there. So, and I mean, the only one that really you might want to keep is the Swiss franc, which is actually has been probably the best of all the fiat currencies, not the dollar. So what I think could be happening, a lot of investors from I don't know where, but international markets, they could be wanting to get rid of those currencies. And the only way to get rid of it is to sell it for dollars. And then they get the dollars, and then they're going to choose eventually what they're going to sell those dollars for. They might be selling them to buy oil. And that's why, in my opinion, it looks maybe like they're both strong. It's because all these currencies as well are just as bad. But, historically, the dollar is the common denominator. What do you think about that?
Right. They could be selling dollars to buy oil. That could be part of it. I don't know. But what I think is the primary driver is the high interest rates are requiring high debt service payments, and there's a lot of dollar denominated debt out there, outside the U.S. So these companies or banks or whoever has this dollar denominated debt, and the dollar supply has been falling in monetary deflation for since April 2022 or June 2022, right? Yeah. We're like 15 months into this, so the supply of dollars is falling, absolutely, and the debt service cost for dollars denominated debt is rising. So these companies are going to have to sell their currencies to buy dollars to pay down their debt. Right. And that's not going to have effect on commodity prices because it's purely a financial problem. So you're going to see the dollar index rise for that reason, and then oil prices and commodity prices rise because this is, from all the money printing and the reverse repos that are still flowing into the system.
Yeah.
I think that's what's happening.
The reverse repo is at 1.4 trillion. It's dropped by $1 trillion. I think you wrote about that. And the thing is, there's a statutory leverage ratio, which they scrapped. The Fed scrapped during the pandemic crisis, so the banks could buy treasuries. But now, if they take that cash out of the SLR, the banks, and buy treasuries, they might be breaking that SLR rule. So maybe they're not putting that cash into treasuries, and that's why treasuries are actually not making any headway, any progress to the upside. That's why we're seeing yields go up. And any thoughts on the Treasury doing buybacks? Do you think that's just like a de facto yield curve control? I think that's what Janet Yellen announced last Friday. They're going to start doing it next year.
With what money?
Yeah, well, just more borrowed money, I guess. more.
Okay.
It's
we're talking about like quantum Ponzi here.
Yeah. Anyway, I don't know if you follow the bond market. I guess you do follow the bond market, but
absolutely, yeah.
And the thing is, I've been hearing of late a lot of people saying, "Oh, we are oversold." The TLT, which is actually a derivative of really not, of a basket of bonds. But when you look at this chart here of a 10-year yield, it doesn't look like we could have a few corrections downward, but it looks like it's breaking out. I don't know if you heard of the turtle trading system, and that's like a momentum-based system. Whenever you break like a 52-week or 20-week high, people pile in. And I think that's why the BIS is concerned about all the hedge funds. And the hedge funds, I think, is another reason why there's so much volatility, I think, in the FX market, because they're not real companies, but they leverage a lot, and they do it in the FX market.
Mm-hmm. Look, one of these days, the bond market is just going to proverbially fall off the proverbial cliff. I mean, the rates are just going to go up and up and up in a scary, scary way. And there's going to be no, technical buybacks or technical reversals. I mean, because if you think about it, like the entire world is loaded with this stuff for decades. And if the price keeps going down and down and down while the dollar's purchasing power keeps going down and down and down because things like oil are going up and up as the dollar's going up. So like, what are these countries going to do? They're just going to sit on their treasuries and lose everything? I mean, at some point, they're all going to run for the door at the same time. And that's going to be it. It could be any point now.
Yeah.
I mean, and that's why I'm looking at the yen so carefully, because the biggest foreign holder of treasuries is Japan. And the higher the Japanese bond yield goes, the lower the yen goes, because the central bank of Japan owns the entire bond market. So basically, the yen is cooked. There's nothing they can do. They'll sell treasuries, and then the yen will get even weaker, and they'll sell more treasuries. This is what an avalanche is going to look like, and it could happen any day now.
Yeah, and the yen has been such a big part of this Ponzi because they've been doing QE and they've had zero rates, for like 25 years. So what the yen carry trade has been a huge part of leveraging the system. And and the only thing that helps the yen carry trade at the moment is a weak yen, because you can borrow in yen, and if the yen is dropping, your loan goes down. And they could still keep doing that if the Bank of Japan doesn't raise rates. But I used to trade these futures, Rafi, quite a lot for my clients, the T-note futures back in the 90s. But I've got this chart all the way back to the beginning of the 21st century. And you can see that it's been a steady rise. There's been ups and downs. And this is the front month futures. because it always changes every 3 months. But
Mm-hmm.
it gives you a good idea. It's almost like, you're going up an escalator and now it's coming down the elevator shaft. So this doesn't look good. This is the reverse of the yield, I guess. And
Yeah.
look at, we just dropped through this level here. And to me, it looks like we could go into the 90s. And what would that mean? Well, the 10-year note future, in the specification, you can look it up. It's supposed to represent a 10-year note treasury of 6% coupon.
Mm-hmm.
So if you go through 100 or even below 100, it means that you're going over 6% in the basket of because there's a basket of deliverables in these futures. And I think maybe Jamie Dimon is looking at that chart because he said we could see 7% rates. And I think he could be right. And most people say, well, that's going to hurt gold. But if you look at the JGB yields, it's been rising from 0 to like 0.75% now. And the price of gold in yen is going through the roof. It's almost 300,000 yen. So it doesn't, and when they started raising rates 18 months ago, the Fed, or I don't know exactly how long ago, rates were at 0. Gold wasn't too far away from where we are now. So gold is holding up really well, I think. And the thing here is not to worry about this interest rate thing, because interest rates are going up now, or yields, not in a good way. It's a signal that people don't want treasuries anymore.
Yeah, higher interest rates are not going to smash gold over the long term, or even the medium term now. I mean, that's the thing we're seeing with oil and dollar going up together. Oil is just another commodity. Gold is also a commodity. It's a money commodity. So it's going to go up with interest rates also. It's going to go up with the dollar index also. That's what happened in the late 70s and into 1980. The biggest gold bull market ever happened at a time when interest rates were rising to like 20%, specifically then. That's the chase. That's the chase that we're seeing. And about Jamie Dimon, I've said this. He's a supervillain. He's not a good person.
Yeah.
He's a bankster, obviously, but he does know a lot about what's going on in the Keynesian banking system, and I do trust what he says when he's talking about just data. And what the other thing I noticed was that the spread between the 10-year and the 3-month yield, right, that just broke through its 50-week moving average. And when that happens, it pretty much never reverses back down. And to get that spread up, if the Fed is going to leave short-term rates at 5.5%, which is where they are now in the 3-month, if they're going to leave them there and not cut, then the 10-year yield is going to have to go 300-400 basis points higher than it is now to even out the yield spread. If that's the direction we're headed in, it certainly does seem that way. And when it does, when the yield spread moves from negative to 0 to positive, and once we cross that 50-week moving average, that's generally what happens, and there's no stopping it. Then that's when the financial crisis is very close at hand, and we're definitely on the way.
And now, Rafi, before we wrap up, I've got the $64 trillion question. I think it used to be million, but let's inflate it.
Okay.
So do you think the Fed and the other central banks, when something breaks, and it certainly looks like things are breaking apart, even though we're probably not told about that in the mainstream, do you think they will come to the rescue, or are they finally going to let everything implode and collapse, maybe to bring in a new system? Or do you think they're going to try once again? And if they do try once again to reliquify, how much do you think they'll have to create in terms of more balance sheet, assets?
The answer is both. They will let everything collapse, and they will come to the rescue, and the rescue will cause the collapse that they're trying to prevent. So yeah, they're
like a double collapse.
Yeah, I mean, look, first of all, they can't just come in with a new system and stabilize everything. That is impossible. The system is gold. They
Mm.
just don't. They just deny that. But but this is what I keep saying over and over. Because of the Misesian regression principle, the price matrix is still gold. Some argue it's silver. Fine, still you could say silver. I don't care what either one. Um, but it is that. So there's no rescuing the system. All they can do is inflate, and they will do that. And at that point, it's really just a nominal question, right? Is gold going to be $35 an ounce, or is it going to be $35 trillion an ounce? But what's the difference? It's just 9 zeros. You just cut them off, and it's the same thing. That's hyperdeflation is hyperinflation. It's just in what terms? Hyperinflation is in dollar terms. Hyperdeflation is in gold terms, but it's all the same thing,
Yeah.
right? This is all a nominal question. So yeah, they're gonna come and rescue. And what they might do is, they did the bank term funding loan with the regional banks. They said, "You give us all your bonds, give us all your treasuries at face value. We'll give you face value for them." That's what they might actually do with other central banks that have all these treasuries. If Japan calls up the Fed and says, "Look, our treasuries, they're melting away, and we're going to dump them on the market unless you want to do it like a private trade where we will give all these treasuries to you, Federal Reserve, and you give us the face value of them right now, or we're dumping them on the market." And they could really corner the Fed that way. I see that as potentially happening. And then what happens to the Fed's balance sheet? It just explodes with all the foreign debt, because if one country does this, the other countries are going to do this, and everything comes home to the Fed, and their balance sheet just like melts away into total negativity and negative equity, and then the dollar just collapses.
Yeah, I mean, right now the Fed's got, is it $1 trillion in losses or 100 billion? I forgot exactly.
Yeah, because it's about 100 billion in realized losses. In unrealized losses, it's a lot worse, right? And then what happens if the Fed says, "Okay, fine, we'll give you face value for all these treasuries," and then Japan has all these dollars? What do you think they're going to do with them? They're gonna buy gold, they're gonna buy commodities, and then everything's gonna fly apart very quickly.
Well, could the Fed keep those treasuries off balance sheet? I guess they can't. I mean,
What's the difference?
Yeah,
If they do, if they don't, like, who cares?
people are still going to see the BTFP. You can go on Fred and see it when it starts going through the roof. But they might at one point stop when they stop publishing their balance sheet and the BTFP. Then the game is over, I think.
Yeah, we're getting there. We're getting there. We just got to get through this last phase, and stay out of big cities. It's already starting.
Yeah, yeah. I mean, I'm in kind of the outskirts of a big city, so I'm kind of got one leg in it and one leg outside. So, but yeah, thanks again, Rafi, and maybe tell the viewers where they can listen to you, and also you said you coming out with the report.
Yeah, so my YouTube channel is Rafi Farber. You can find that easily. You can get my daily report, banking market, gold and silver report, the Endgame Investor. You could just Google that, and you'll find it on Seeking Alpha. You can get a 2-week free trial and check it out. Or you can find me on Twitter at Rafi Farber, or a Patreon, where I give a religious angle on this stuff for people who are interested in what was going on 3,000 years ago on these sort of topics.
Yeah, and you said you're doing a report. Is that for Arcadia, isn't it?
Yeah, it's for Arcadia Economics. I do once a week show, the silver report for Chris Marcus at Arcadia Economics, and that should be out tomorrow. That's a popular one.
Yeah, that's on YouTube as well. All right, Rafi, thank you, and have a great day.
You too.